Ladies and gentlemen, welcome back. This is Christopher Aaron. It is May 26, 2022, and I hope you are well. It is time for a showdown royale. In this video, let us do Bitcoin versus gold and see how the market is looking for the new form of currency versus the age-old store of wealth. This is going to be a big one. And I do want to let you know that we are expanding the services here across the board that you will see here in the YouTube videos, on our free Twitter account, as well as the premium services that we are offering. We are expanding beyond only precious metals, and we're going to start covering, yes, Bitcoin from time to time, the stock market, other commodities, real assets, copper, oil, platinum, as well as some of the currencies that exist in the world. And before you go any further, look, I am not going to be forgetting about precious metals. No way. This channel is always going to be having a primary focus on the world through the lens of precious metals. However, just think about one thing for a moment. One day, right? One day, precious metals are going to top. When is it going to be? Well, we have an outstanding target for gold, still valid right now, of above $2,800. Beyond there, does it go to $3,000? Quite likely. Does it go to $5,000 eventually? Probably. Does it go to 10,000 eventually? We'll have to see about that. But one day, no matter where it is, and no matter where silver is, the metals will top. And so, a prudent investor has to look at themselves in the mirror and say, what do I want to be? Do I want to be a one-trick pony for my entire life? With a portion of your portfolio, I think it's appropriate to always maintain a focus on precious metals. But over the rest of your life, whether it's 5 years from now or 10 years from now, when the precious metals top, you want to be prepared and studying other asset classes with us. So that is going to be some of the expansion that we're doing. Again, I will never stop covering the precious metals because I have a love for gold, for what it represents, for freedom, sovereignty, wealth, crystallization, stored outside the banking system, outside the hands of the manipulators and the central bankers and those who would try to rob us by all means possible. That is what I believe deep down in my heart. Let's get into it. Make sure to hit the red subscribe button and the bell icon so that you'll be notified when these videos come out. And make sure to follow our free Twitter account at iGlobalGold. You'll see why in just a moment. I made a call on Twitter that I posted 1 year ago on Bitcoin. And so if you follow the Bitcoin market primarily, you're going to want to start to follow us here because you would have saved yourself a ton of pain and suffering if you had followed our call on Bitcoin 1 year ago. I'll show you the proof for it. I'm not making this up. Let's get into it. Just want to let you know, our premium service as well, we're going to be expanding the coverage. And I'm tentatively going to be calling this Precious Metals Intelligence Plus for the time being. Over the coming months, we're going to be doing a significant rebranding to expand, to talk about some of these other things. For now, Precious Metals Intelligence Plus. And the plus means that not only are we covering gold, silver, and the mining sector, but we're covering the rest of the commodity complex, currencies, the US dollar, stock market, and yes, even Bitcoin when an appropriate trade occasion comes up. Legal disclaimer. Please take a moment to read. Bitcoin. So, if we're going to do gold versus Bitcoin, let us start with Bitcoin alone. Here is the 3.5-year chart of Bitcoin. Now, let's bring up the key. All of these lines have a meaning to them. If you are new to this system, if this is the first time that you're watching the iGold channel, I want you to get to learn this system, and you will see how this works and how you can stack the odds in your favor. Now, if you're going to just say for a moment, oh, all technical analysis is mumbo jumbo, look at this. Here was our call on Twitter. So make sure you follow the account at iGlobalGold. Here was our call 1 year and 1 month ago, April of 2021. You cannot change the dates on the Twitter posts after you post them. April of 2021, I said Bitcoin setting up for a huge top circa 70,000. Mind the wedge. So this wedge pattern that you see in orange is a topping pattern, and there it is shown in turquoise on the long-term chart. And I said top circa 70,000. This call was published right there. And what was the ultimate top? Well, it topped right here at 64,000 and right there at 69,000. So my top call was at 70,000. Yes, we were about 1,000 Bitcoin off, but pretty darn close, if you ask me. And that would have saved you a heck of a lot of pain. 32,000 Bitcoin later, to be exact, from the moment that we made this call. So if you can follow these patterns with us, let's let bygones be bygones here for a moment, but just talk about the current state of the market. If you can follow these patterns with us, you will set yourself up to avoid the catastrophic losses and to make high probability investments and trades every time that you do it. So, where are we today? I have bad news for you. The decline in Bitcoin is not over using our highest probability model here. What do we have to speak about at this point? It's this. It's a slanted head and shoulders pattern right here. You can see the left shoulder, larger head, right shoulder, which had an amplitude of $27,000. So you measure the amplitude from the peak of the head down to the midpoint of the slanted neckline. You have the breakdown right there where my mouse is, and then you take the same amplitude and subtract that from the breakdown point, yielding a target down here of 17,000 Bitcoin. When I put something in green, this is a target. This is an official expectation, highest probability expectation based on the sum of the visible evidence available to us today. It would take a close back above the breakdown of the slanted neckline to negate the target. And you can see how after the breakdown right there where my mouse is, below the right shoulder, look at how the market was rejected 3 times on this slanted neckline. So, you can ignore this if you want, but this will put you on the right side of the market the majority of the time. Breakdown $32,000 later, if you had followed our warnings, we still have a lower target. So here's the thing. Even though we've come down significantly, we have the lower target. It's almost 50% below still where we are today. So I do not think this is the time to be backing up the truck. However, I do think after a little bit more nominal weakness here into this spike low around 26,000, I actually think we're getting ready for a fairly significant, let's call it midsummer rally. Relief rally is what this should be. It should be a recovery of the most significant part of this decline. My estimation is that this rally would not come above 40,000 if it were to happen throughout the course of this summer. Could it get up to 41, 42? Sure. But you know what? It could also be significantly less. I wouldn't be surprised based on the weakness here if the recovery rally only gets back into the mid-30s. And then Bitcoin should be rounding over, and this fall into early 2023, achieving that $17,000 target. Now, at $17,000, remember, we calculate this target based on the amplitude of the head subtracted from the breakdown point, and then we look in time to see where that's going to match with high probability support zones. So you have this long-term best fit in the solid magenta here coming in at exactly the same level that is the amplitude measurement. So when you have two independently derived support and target levels all matching up in the same vicinity, this increases the probability that this will be achieved. Now, I actually wouldn't be surprised if Bitcoin overshoots our target to the downside and comes back down to the region of 10 to 12,000 before forming, or at least attempting to form. I can't predict always 5 steps ahead of time, but I think Bitcoin will attempt to form a longer term bottom here in the 10 to 12 to 17,000 range. And that's a bit of a range now, but the most important point is to remember this should be down roughly 50 to 60% still from where we are today. So there's still more downside to come. And then when we get to this point in the 10 to 12, perhaps 17,000 range, we will look for an independent type of bottoming pattern, such as the inverse of this wedge here. We'll be looking for a bottoming wedge, perhaps an inverse head and shoulders pattern, the inverse of this, to confirm a bottom setting up here in the high probability zone. So we take it one step at a time. The summary is more downside to come for Bitcoin, if not immediately, but certainly later this year. So make sure to take some defensive action. Then we get into the main topic of this week's broadcast, which was Bitcoin versus gold. And this is going to be absolutely fascinating to watch out. This is why, even though we're going to start covering Bitcoin more frequently, not every single week will I be talking about Bitcoin, but when there's an important turning point, I will certainly cover it. However, this is why I think if you're in Bitcoin right now, if you take that analysis and say, look, we have still in the range of 50 to 60% downside potential here, and then you look at what that's going to mean, given that we have a very clear, look at the number of hits on this 8-year rising trend. 1, 2, 3, 4, tiny little false breakdowns there. 5, 6 hits on an 8-year trend. So basically every 12 to 18 months, we're getting a test on this trend. And this is in the log scale. So this is a very aggressive trend in favor of Bitcoin. And if you think, well, Bitcoin in itself has another 40, 50, 60% to lose, what's going to happen here is that Bitcoin is going to break through an 8-year rising trend versus gold. And what that means is the period of Bitcoin outperforming gold, as we have seen over the last 8 years, is effectively going to come to an end. Now, it doesn't necessarily mean that gold will outperform Bitcoin for the next 8 years. We can't say that for certain yet. And there could be, in fact, what I think is going to happen is, so we'll be looking at the initial stopping point here coming down to roughly 10 on the ratio. Right now, we've closed just above 15. In other words, it takes 15 ounces of gold to buy 1 Bitcoin at today's spot prices. So for an initial stopping point, what I see here is this trend breaking. You think about that last chart that we just looked at of Bitcoin filling the head and shoulders target. So we should be coming roughly down to 10. So that would be another 30% loss in Bitcoin relative to gold. Then I think there's going to be a counter trend rally back up to the 15, 16 area to retest the broken trend. We'll call it midsummer. But the problem is here, even at 10, which would come close to the target that we have for Bitcoin, even at 10, there's no real support here. When I look at this, the fact that we went straight higher through 10 on the way higher, what it means is that there's not going to be any support for this ratio on the way lower. The real next strong area of support for the ratio comes in around 5. You can see these lows, these lows, these lows all in here, this consolidation all in here, roughly at the 5 level is going to be the next significant support for Bitcoin versus gold. So in our highest probability model, as Bitcoin is reaching that target of anywhere in that range, 10 to 12 on the low side, 17 on the high side, that is going to equate to a ratio of roughly 5 to 1 for Bitcoin versus gold. And from there, we will reassess. Maybe if Bitcoin stabilizes in the ratio of, let's say, 5 to 8 for a year or two, maybe it can start another rising trend for a couple years after that. We have to stay open to that possibility. But we also could be looking at Bitcoin basically, I mean, it could come all the way back down, back below 1-to-1 versus gold. That's the message of an 8-year rising trend break. I cannot predict everything years and years into the future. We take it one step at a time, which tends to be with a 6 to 12 month time frame. I'm confident that Bitcoin is going to be losing still a significant amount of value relative to gold. You look at where this could come, let's say at 5 on the ratio, and maybe if it's a big deflation, maybe it's gold kind of grinding in the current range, maybe grinding slightly upward up to 2,000, and Bitcoin reaching this 5-to-1 ratio with Bitcoin falling to 10,000. So certainly that would be within the realm of reason. 10,000 Bitcoin, 2,000 gold, and then we reassess from there. One way or another, what this means is that if you're heavily exposed to Bitcoin, and of course the other cryptocurrencies are going to be, for the most part, more leveraged to the downside than Bitcoin is. So if you're exposed to Ethereum, even any of these quote-unquote stable coins, we've just seen what happened to Luna, completely blown up. And now they're trying to come out with a Luna 2.0, and okay, I mean, how many of these things do you really want to get into before you say something is wrong with the way that the system is structured right now? But even though I do believe cryptocurrency has a long-term future, I just don't believe it's going to be in the form that it currently exists, where you have 50,000 speculative coins all competing for bids. I do think it has a long-term future as a payment platform. That said, over the near term, the message here of the Bitcoin head and shoulders and of the ratio between gold is that you should be taking defensive action in Bitcoin, and one of the places that is going to hold up better is going to be gold over the next 6 to 12 months. So, as I said, Precious Metals Intelligence Plus, as the name here over the interim period is going to be called, is now going to start covering Bitcoin when we have major trade opportunities. In addition to the precious metals sector, all of the open market investments that we are making, whether it's going to be a trade in Bitcoin, the stock market, because I do think there's going to be another major leg lower in the stock market later this year in September, and we're going to be looking to short the stock market. Whether we're talking about the US dollar, other commodities, as I said, all of the open market investments and trades that we are going to be making, as well as videos like you're seeing now, just a lot more in depth. You're going to have a video that's roughly anywhere from 45 minutes to an hour and 15 minutes every week, covering all the important things that you need to know from a technical basis on these markets. And we tailor it to what is the most relevant thing that you need to know this week. If Bitcoin is in a consolidation pattern, we will focus more on the stock market and the currency markets. If silver is being boring for a few weeks or a few months, we will focus more on gold and perhaps the mining sector and Bitcoin. So we're going to continue to have a primary emphasis on precious metals, but expanding the coverage beginning now into these other markets to be the best informed investors on a global scale that we can be over the years ahead, right? We talked about it, whether or not gold is going to top 5 years from now at $10,000 per ounce, or whether it's going to top 2 years from now at $3,000 per ounce. Let us start being the best informed investors that we can be around the world. Our service for higher net worth investors, if you're not looking at making open market investments and trades, but you want to get the highest amount of leverage possible in gold, silver, and the commodity sector, that is called elite private placements. In elite private placements, we negotiate deals on your behalf with gold mining companies, silver mining companies, copper mining companies, etc. And we receive free, yes, free, warrants on every single deal that we negotiate. This has a higher minimum, typically $10,000 per investment. But you know what? When you get to that level, And when you can withstand the risk tolerance of these private placements, you can massively increase your upside compared to open market purchases. And remember, you will get a free Precious Metals Intelligence Plus subscription with Elite Private Placements so that you stay up to date on everything happening around the rest of the markets. If you would like to speak to me one-on-one, my name is Christopher Aaron. I work with individuals by email, by phone, by Skype, whatever works best for you. And I take no fees and no funds from any of the companies, any of the crypto promoters, any of the bullion dealerships, any of the mining stocks that we coverage. Oh no. I am fully independent so that you can get an unbiased, researched perspective on your situation. Make sure to reach me on the Consultations tab if you would like to talk. I look forward to speaking with you. Remember, the message of Bitcoin is still, after a relief rally mid-summer, notably lower prices still. So, if you're saying I'm in it for the long run, fine, but at least look to take advantage of the bottom when it arrives, and we think it's going to be notably lower than we are today. Gold should be holding up better than Bitcoin. We cannot say the same thing necessarily about silver, unfortunately. So there's a lot of intricacies here. Silver may succumb to the deflationary forces in a way that gold does not here over the next 6 months. Maybe it will. Nothing would make me happier because I invest a lot in silver, but we have to look at things realistically. Thank you for tuning in. I'm glad to have you here. You will notice the expanding coverage here over the weeks and months ahead. But as I said, never forgetting about the precious metals because they represent something truly unique in the world.